All right, second, we're going to go over. Um, so on this site, you have to, you can really only have Bitcoin on there. Uh, yeah, I think you're good with just Bitcoin. I have to look at the features because unless you're selling a call, shorting a call out of money call, that would be where you have to give away your Bitcoin. Now, if you're buying a call or shorting a put, where you have to have cash, everything else you have to have Bitcoin. So for everything that we're discussing now, it would be just Bitcoin. But say by, you know, this is probably what I'm going to do. I don't know. I mean, December 21st or December 31st, 2021, the calls right now, it's pretty tight spread for 2,900 ish. You can get $2,900 for putting up one Bitcoin and saying that it's not going to be worth $100,000 by December 31st, 2021. Now, I mean, do you want to give it away for that? That's something we can talk about later, but I'm assuming price is still sitting at around 62 right now. But what you can do, this site doesn't allow you to use both of them, but it's options, strategies that I've looked at before. It's basically you have a covered call. So you could sell this 100,000. I don't want to sign in. It'll pop up here and it'll say sell one Bitcoin for 28.51 if you want to. If you're the seller, that's called the bid. It's called the ask. And you can turn around and use that to buy a $50,000 put for probably this is pretty widespread, but I'm sure if you went in and offered 28.51, you're going to get filled. So for no money, your one Bitcoin is covered up to $100,000. So a 1.5 times move up over that, you know, $38,000 move up. But to the downside, you're protecting yourself to 50,000, which is a little over 20% move down. Um, and if nothing happens, if price ends up at anywhere between 50 and 100,000, you keep your Bitcoin, nothing happens. If price plummets to 32, it didn't cost you a thing to your call that you sold will basically go worthless and you'll be able to sell the Bitcoin that you have if you want to. You'll be able to sell it at $50,000. But even better, if it does it somewhat soon, you could close out your put for better than what's called parity. So, say Bitcoin went down to 32,000, and so you would make a profit of 18,000 by selling your $50,000 put at that you paid, 2,500 for. So you're gonna make a little bit less than that. So the 18,000 minus 2,500, so $15,500. But often, what'll happen with, like, especially a volatile move is that option will now be trading at, so it's sitting at $18,000 away from the money. Say it's mid December. Dependent, the time always makes a difference in it, but if it happens really quickly or say mid December, and you have a little bit of time left, that'll be sitting there trading at 22, 23,000. So you can just take your cash back there. It's protected you from the downside fall. It didn't cost you anything to get in. And basically, you add that cash, you can buy back Bitcoin, whatever you want to do, but it hasn't protected you from, or you haven't really lost much of anything. So that's it on that.